So when you're looking at an 80% rule, um, if you've been paying attention in the Discord or in the YouTube or whatever, um, when we're trading inside of like our previous day value area high, value area low, that means that all of the players have accepted this area as an area of value where they're content with price being inside of. Once we break outside, um, like we're now like trying to establish like a new area of value. Um, when this happens, so in this particular instance, this could be bullish or bearish. So if we break below the previous day value area low, um, it would be just the same thing but a bullish pattern. If we're breaking above the previous day value area high, it's going to be bearish. And what I'm talking about specifically is when we come outside like this, where we're actually like ranging outside. So you don't want to just see like one candle come outside and then go back inside. You want to see like at least, a few 5-minute candles or whatever close outside. In this case, we're on 30-minute candles, so this is like massive. We actually want to go down to 5-minute candles. Um, and so um, when we base outside of our value area like this and come back inside, so what's happened here, we came back inside. This is an extremely bearish move. And again, inverse, if we're coming from outside of the bottom to inside, that's going to be extremely bullish. And for people that might be paying attention here, I'm not drawing this perfectly, but you can see a lot of times at these areas, like we'll have like a bear flag or a bull flag or whatever. So like a lot of times if we cross above, we'll actually have like a bull flag here before we run up further. When we cross down below, we'll form like a bear flag before we cross back below. And what you're looking for when we cross back below is you want 3 5-minute candles minimum to close inside of this level. And then you want a retest of the level, and that's where you would enter short. So in this case, our retest is right here. And technically, like you're entering at the top of the bear flag, where normally retail would be entering a bear flag like right around here on this candle. So you're missing a good point of this part of this move. So this we're catching 41.5250 down to 41.4325. So we're already like in for 5 points when retail's hopping in. Um, and basically when this happens, you kind of have to trust the process, but there's an 80% chance that you're going to go from this value area high to this value area low. And as you can see in this case, it played out. You will, have some pullbacks that might look scary, but it works 80% of the time. And so if you play this, consistently, you're going to be a consistently profitable trader. You do want to be aware, though, when you take these, these plays, your previous day POC or whatever, if you have like a previous week POC that happens to be in there, that might be a place where you end up getting a rejection or a bounce. And you can see in this case, we get a bounce right here, right off of the previous day POC. And all of these levels that we talk about are going to be a range. It's not just a specific point on the chart. So this is a bounce from our previous day POC. You would want to probably lock in your profits here. Even though we did make it a little bit further, probably not worth this drawdown on your play before you got here. And then by the time you got to here, theta probably ate you up a little bit. So this is probably, your best exit is to plan on getting out at the previous day POC or whatever you have on your chart. So that's the 80% rule. And again, for bullish, you just want the same thing. You want it to base outside come back inside, retest. You would enter along here and play it to the far side. 80% of the time, it's going to go to the far side. Anybody have any questions on this?